And Tata Investment, of course, after the Tata Capital IPO, positive brokerage commentary for Zomato and 361 WAM, while M&M continuing its rebound after a sharp sell-off over the last 2 weeks. And lastly, some stocks that did well today on the back of volumes. Narayana Health at an all-time high in today's trading session. Gland Pharma did well. Vijay Diagnostics saw a sharp bump up towards the close of the trade, almost 14% higher, ending at the day's high. Metro Brands continued its up move, and Sun TV, which is one of the F&O exclusions as well, ending 4% higher in today's trading session. Back to you guys.
Thank you very much for that. We have a guest now joining in, Bala of cashthechaos.com and Sudip Bandyopadhyay of Inditrade Capital. Gentlemen, thank you for joining in. Very, very quiet Tuesday. All the action took place in the first 30 minutes and then things just went sideways. But Jay, first, set us up for Thursday and Friday. Thursday is going to be expiry, so crucial trading session. What would be some top stocks that you would have on your radar?
The market is, below significant support. Rima, I anticipated the market to bounce from 22,700, but the market's having broken that level and it's just went flat here. There is a risk, small amount of risk though, that the market could see some amount of distress selling because it's not at a significant support. And as we see the screen in the US markets today, there is a considerable bit of sell-off coming through in the crypto markets. Crypto markets are a signal of risk-off. And there's a very sharp sell-off in Ethereum and Bitcoin has clocked a double top. So given this background, there is a risk that the markets could first go to support rather than bounce, converse to what we had anticipated the market to do. But the small caps and the mid caps have responded from support. So maybe it's just pending selling that's there in the large caps rather than the broader market. So when it comes to stocks, I'm looking at two stocks negatively. One is Interglobe, and the second one is a conditional one. If SBI Life were to drop below 1462, I'll look at it negatively.
Interesting. So two bearish calls, Interglobe and SBI Life. Thanks for that, Jay. Sudeep, coming across to you with some queries for the timing. Let's focus on the PSU banking index. That's slipped in trade after the government invited bids to appoint merchant bankers as well as lead managers for various stake sales. Sapna Das joins us to fill us in with more details. Sapna?
Well, I suppose this particular announcement by the government for equity dilution or rather minority stake sales in listed public financial institutions as well as select public sector banks, I think this had been in the offing for quite some time. Way back in January, we had reported that, of course, 4 banks where the government shareholding is above 93%, namely IOB, Central Bank, UCO Bank, as well as Punjab and Sindh Bank. Some kind of push will be required in terms of minority stake sales, probably, apart from the fact that the banks also have plans for QIP. But the fact remains that the shareholding is so high and the timeline for these entities to meet the minimum public shareholding norms is August 2026. So there isn't too much of time if that needs to be hammered down. However, having said that, in terms of the public financial institutions, possible entities could be wherever the government shareholding is above 75%, namely, of course, LIC is a known candidate. And the plan for an FPO, there is a full plan that the government has in mind. It just depends upon the quantum and the timing, basically. And also other entities like, say, for example, GIC, New India Assurance, and maybe even CPSEs like IRFC, wherever the government shareholding is above 75%, I think the game plan now is very clear to bring it down to the SEBI norms. And we'll have to wait and watch how this progresses. Of course, the appointment of the iBankers, it's by around end of March. So there is still some time away, and plus they will have a 3-year tenure with a 1-year extension. So, the entire plan is at a very preliminary stage right now, but I'm sure that down the line, these are some of the entities that the government has in mind for possible OFSs.
Okay, Sapna, thank you very much for that. The other important story in the financial space is the potential IPO of Tata Capital. In fact, shares of Tata Investment surged in trade. Tata Capital has announced its plans for D Street. The IPO will be a combination of fresh issue and an offer for sale by existing shareholders. Ritu is here with the details.
That's right. The board of Tata Capital has approved plans for an initial public offering which will comprise of a combination of fresh issue of 23 crore equity shares and an offer for sale by existing shareholders. The board has also approved issuing shares worth up to 1,504 crores on a rights basis to existing shareholders. Now, while Tata Capital did not indicate any timeline for this IPO, it said that it will be subject to market conditions, receipt of various approvals and regulatory clearances. Now, incidentally, this will be the second IPO from the Tata Group company within the span of 2 years after we saw that bumper listing of Tata Technologies in 2023. The move is very much in line with RBI's mandatory requirement for upper layer NBFCs to get listed within 3 years of being notified, and for Tata Capital, which is on this list, the deadline is September 2025. Now, as of March 2024 end, Tata Capital had assets under management of more than 1,57,000 crores with profits after tax of about 3,150 crores. More than 85% of its portfolio consists of retail and SME lending. It serves more than 4.5 million customers across 723 locations. In terms of shareholding, the promoter Tata Sons holds nearly 93% stake as of March 2024. Another 2.15% was held by Tata Investment Corporation and the rest by other Tata Group entities, individuals and International Finance Corporation. So while we may see Tata Capital get listed by September this year to comply with RBI norms, it is still unclear whether Tata Sons will have to follow suit. That's because their application for deregistration is still under review by the RBI. If the RBI grants them approval, Tata Sons can remain private. If not, the Tata Group may have to navigate a much larger and more complex listing process.
Thanks, Ritu, for that. Let's go across to Sudip. Sudip, any view on these PSUs that we discussed or the Tata Group of stocks?
I think the PSU banks definitely valuation-wise they do look attractive, but there are a lot of challenges as well. So between PSU banks and private sector banks at this stage, apart from SBI, I would probably stick to the private sector banks only. Some of these banks which they're talking about, going out and divesting includes IOB. IOB performance has been improving, and IOB is one bank where I think Government of India's holding is close to 90%. So that's one counter I'll be watching closely if it goes for a public offering of some kind. As far as Tata Capital is concerned, of course, it's going to be a very interesting IPO. And I think it's good that some of these companies are now getting listed. That increases the depth of the market, which is very critical for ensuring that, when we have enough and more liquidity, it gets distributed properly instead of, valuations reaching unrealistic levels of some counters. So wider choice for the investor is always good.
All right, Sudip, I wanted to ask you another question on, we're talking about this heat wave. And, when that comes to mind, there are various ways of playing it. But I think that you were positive on some of these consumer durable companies. If I'm right, you could tell us, obviously we need to battle this heat and, keep ourselves cool in some way or the other. But what would your top play be out here?
Well, of course, this heat wave in February definitely warrants looking at air conditioning companies, air conditioner manufacturers. And, Voltas definitely comes to my mind. Performance hasn't been too bad, nothing great, but not too bad in the last quarter when they announced results. And, considering their smaller air conditioners for home, which they have, and I think they're gaining market share there, I think I would go for Voltas. I will also give you one more reason. The budget ensured that there is a lot of tax breaks for general middle class Indians, and that consumption, that money probably will go for consumer durables, not consumer staples. So if that theory holds, again, consumer durables like a Voltas does get benefit through air conditioner sales. Also, there are other consumer durable companies, but at this stage, if I have to recommend one, I will recommend Voltas because the valuation wise also it's comparatively in a better position.
Got that. Voltas is the preferred play. Let's get to the other big story, and this is an exclusive conversation with Federal Bank MD and CEO. He said, and I quote, "I wanted to be the captain of my ship." Speaking to Shireen Bhan, he further said that the bank's goal is to be among the top 5 private sector banks. Listen in.
I think wanting to run your own ship, captain of your own ship.
Captain of your own ship made the choice easier.
That was the easier. That is what made it easy, I think, and the opportunity itself of Federal Bank. You know, very well poised, great journey. Pulled out of the pack of old private sector banks, clearly leagues ahead. Just the breakthrough into the top league is possible. That story excited me, and I am a kind of person who needs to come to work every day with a spring in my step, wanting to do new stuff, and I thought this was a very exciting opportunity. There is advantage of that brand visibility in the adjacent states. At least the adjacent states know the brand well. So I think growing outward from that state into adjacent states and then beyond is something that will help us. Some of these are really strong bases from where you can build out. And I am quite optimistic that if we can replicate these 3-4 elements, service, the Rishta, the attrition rates, these are very strong positives. We are very clear. Phase 1 of the plan is Tamil Nadu, Maharashtra. You will see the expansion, far deeper expansion in these two states first. And as I said, we will keep rolling out to Karnataka, Andhra, Telangana, and then to the other states going forward. We also have a good moat built over years in Northeast, by the way. So there are some advantages in some other parts of the country as well. We are not a bank which has a very comfortable cost to income ratio, as you know. I mean, we are at about 52-53%, and I would say I have relatively low wiggle room on stretching that too much. So therefore, we'll have to follow a strategy where we grow our revenues and put on costs in tandem. We'll have to pace them reasonably equally. We will pace ourselves in a manner that we keep control of our parameters and do not run away with too much investments in the beginning in the hope of getting revenues. We will balance ourselves.
The other big stock was 361. Now, remember, a month back, the company had announced the acquisition of the brokerage firm BNK, Batliwala and Karani. Now, yesterday, the company held an analyst meet. And the key takeaway from the analyst meet is that the deal is expected to be EPS accretive by 3 to 5%, and the company expects a revenue growth of 15 to 25% in the BNK business for the next 3 to 5 years. So brokerages came away feeling very upbeat about 361. Motilal Oswal has a buy call. Their target price is 12.50. On the core business, Motilal Oswal in its note says that the company is poised to gain market share in the current market condition. Clients are holding 10 to 20% cash for equity deployment. Jefferies too is upbeat. Their target price is 12.70 and they too have a buy call. Sudip, in this entire wealth management or generally in the capital marketplace, as we used to call it, how does 361 fare after the recent correction and the acquisition that they've done?
I think the acquisition is definitely good because, it will feed into their existing businesses. Instead of execution being outside, the execution will be in-house, and that ensure, efficiencies as well as, EPS accretive. It should become definitely. Overall, I think this space was doing very well. The correct market correction took some steam out of it, but long term, from a investment point of view, some of these stocks still look good. And, I would definitely name Motilal Oswal here. I think it's a very well diversified company. And I think that should do well over a period of time. So investing in Motilal Oswal at current level looks good. 361, yes, it was attractive. The acquisition is good, but valuation, I think, still a bit rich. So I would not venture there. Amongst the other capital market infrastructure companies, I do like both CAMS and KFintech. I think the opportunity for growth is infinite here as things stand today. And, it's to a great extent, capital market, may go up and down, but I think they have a steady stream of revenue, which will keep accruing. Southeast Asian markets, which has been opened up by some of these companies, also provide incremental revenue and EPS opportunities.
Okay, all right, got that, Sudip. Jay, I wanted your view on the tech space. Plenty of conflicting reports are coming in there. towards the end of 2024, actually, people are talking about, FY26 seeing a rebound in earnings growth. Suddenly now, with the Nasdaq coming under pressure, we're seeing some of these stocks actually have corrected a goodish deal just in the last 5 to around 8 trading sessions. What's your take, the levels you're looking at on the index, and any stock calls?
Yeah, are the stock calls mean are you looking at the Nasdaq?
No, stock calls here in India.
Okay. See, the techs have been one of the strongest sector, Nigel, but I've been pointing out repeatedly that 39,900 is absolutely crucial. It was the earlier high of 39,900, and the support was the current support was 39,900. So it broke through a double support, and the markets are coming under pressure. Infosys, that's the absolute crucial one. It's got a very large weightage, even larger than TCS, if my recollection is right, on the Nifty IT index. We don't want to see Infosys close below 1710. If it does close below 1710, the long-term trend line from the dot-com boom of 1996 levels, there's a trend line running through the COVID low and the June 4th low. So if Infosys were to break below 1710, there is a good possibility that long-term trend line could get breached. So we want to see Infosys stay above 1710 for bulls to have a chance to fight back.
Okay, gentlemen, thank you very much for joining in, Jay and Sudip. It's time for a short break. On the other side, we'll get you the top corporate voices. Stay tuned.